Hello traders, welcome back to another episode. As you can see the title, the video is about supply and demand flip zones. You're going to be learning a ton of information from this episode, so make sure you buckle up, get your coffee, get your notebook, and take screenshots, all right? Pay attention too. Without wasting much of your time, what we're going to be doing this episode is I'm going to be explaining each of this diagram one by one. I'm going to be starting from the left, and then we're going to go to the right all the way, all right? One by one. So the first one here is, this is the change of character model or chalk model. All right. So here we have lower low, higher high, higher low, higher high, and then we have the price not respecting the last higher low that created the higher high, and this created a change of character. Once this happens, what you're going to be doing is you're going to be marking this entire pullback on the higher time frame before the drop. You're going to mark this entire pullback on the higher time frame before the drop. So this is how it's going to be going. You're going to be marking all this pullback before the drop here. So once you do that, you can go to the lower time frame and refine and try to find the best area where you can enter the market in order to minimize your stop loss. All right, this is called the change of character model. All right, the second one here is basically the flip side of this one here. So now we have a higher high, lower low, lower high, and then lower low, and then we have a reversal. So reversal, price did not respect this area here, which is the last lower high that led to the lower low before the break of the structure. So now we have a price creating a change of character or a reversal. All right. Once this happens, what you're going to be doing is you're going to go ahead and mark this entire pullback before all this happened. Okay. You're going to go ahead and mark this entire pullback, and you're going to be going to the lower time frame. After you go to the lower time frame, what you're going to be doing is you're going to be refining to find the best demand area that, you know, in order to minimize your stop loss. All right. All right. So this is called the change of a character model. Very important. Very nice. It happens most of the time. And the second one is, which is very, very important, is the flip plus change of character, or the flip plus choke. This is where supply and demand flips. Okay. This is where demand turns into supply and supply turns into demand. Very important too. So here we have a price creating lower low, we have price creating lower low, and then higher high, and then price creating higher low, and then price creating higher high, and then price basically coming back to an area of a demand zone. You can go ahead and mark this entire area on the higher time frame, or you can just refine it to the best order block or the price demand zone on the lower time frame. All right. So in order to find a demand zone has to basically break structure. If a demand zone does not break structure, it is not a valid demand zone. And a supply zone has to also break structure. In order for a supply zone to be valid, it has to break structure like it did over here. Always know that. Okay. So right now what we have is we have price creating higher highs, higher lows, and then higher highs, and then we mark our demand zone on the higher time frame. Now what we're looking for is we're looking for this reaction here. Okay, this reaction is what validates if this demand zone is valid or not, if this demand zone is strong enough to hold the price or not. So now here we have the reaction after price came back to the area of demand zone here after the break of the structure. Okay, higher high, higher low, higher high. We marked our demand zone. Price came back all the way to retest the demand zone, react to the demand zone, and now this validates this area of demand zone. But what happened after that is, instead of price going up and creating a higher high, taking out this structure, what happened is price now basically did not create a higher high. It continued to the downside. So the reaction here was taken out. Once this reaction is taken out, this is basically marked as a failed reaction. This is marked as a failed demand zone. Price did not held it very much. We had the reaction, which is very important, very good, but the price did not continue going up to create the higher high. This means the supply is more stronger than demand. Demand is not able to hold the price in order to continue a new higher high, but supply came into the market and took out demand, creating a flip plus change of character. Once we get this failed reaction here, the price came back to take this area of reaction, taking it down all the way, creating that a break of a structure or a failed demand zone. And then after that, we have the price creating a change of character or a reversal. So this is an indication of where demand wasn't able to take the price high to create a new high, but supply came into the market and took the price to the downside, creating a failed demand zone and a change of character. All right. Once you have this area, what you're going to be doing after that is you're going to be marking this entire area on the higher time frame, and then you go to the low time frame. Okay, this entire area here. Okay, you're going to go ahead and mark this entire area before the drop here that created the change of character, that also created the break of this reaction here. Okay, so you're going to mark this entire area, and then what you're going to be doing is you're going to be going to the low time frame, and then you're going to refine it and try to find the best supply area that you can find, especially around the higher low area before the break of this structure. Okay, before the break of this structure here. All right, now that you know that, now that you mark your supply zone, price going all the way down, and now you wait for the price to come back to the area of supply that created the change of this character, that also took out the reaction here. What you're going to be doing is you're going to be waiting for the price to go back on the lower time frame to create higher high, higher low. And then once the price reach this area of supply zone, and then you're going to be waiting for a change of character, and then you're going to be waiting for that short-term supply zone area, and then you're going to sell targeting this area here. Okay, this is a buy, an uptrend of flip plus change of character that ended up turning into a downtrend. Okay, let me try to repeat this again. Price was creating higher highs, higher lows, higher highs, and then we mark our demand zone, this area. Then we wait for the price to come back to our demand zone. But what we was expecting is for a price to create a new higher high to break this structure here. But unfortunately, that did not happen. Demand was so weak, and then all we wanted for is to see this reaction that will clarify for us that this demand area is very strong or very important. Okay, price reacted to this demand zone, and then after that we see a drop that's creating a failed demand zone and a change of character. Once we get that going, what you're going to be doing is you're going to be waiting, you're going to be going to the lower time frame, and then you're going to wait for a price to go back to the area of supply zone and then sell from here. Okay, this is a very, very safe flip plus change of character model for an uptrend. Okay, now this is the flip side of this uptrend here. Okay, so the flip side of this one is this is a downtrend market. Let's say the market created higher high, lower low, lower high, and then lower low. Okay, once the market created this lower low, we went ahead and marked our supply area here. Once we marked our supply area here, price came all the way down, and when the price came all the way down, it did it kind of went through it. It kind of went through it and created a failed supply zone. A failed supply zone. This means supply could not be able to hold the price, and demand took over, creating change of characters. So once you get this change of character and the price created the higher high, and then you wait for the price to come back on the lower time frame to the area of supply zone. Okay, once the price comes back to the area of supply zone, we're going to wait for a short-term change of character, and then we're going to execute a trade targeting this area and this area here. This is very important, and this marginal is called flip plus change of character. This is where price fails to react to a supply zone and then cuts through it, and then after that creates a failed it creates a failed supply zone, and then demand taking over. Demand takes price from here, creating a change of character, and now we're waiting for the buyers to come back to the area of demand, and now we buy and target this area high here, and then this area here. Okay, the third model that we have here is we have the price creating lower low, and then higher high, and then higher low, higher high. Okay, once the price created higher high, we went ahead and marked our area of demand zone. Remember, you can mark this entire pullback before the break of this structure and refine it on the lower time frame. But now if you already refined it on the lower time frame, what you're going to be waiting for is the price to come back here and react to this area of demand zone. Your main goal will be waiting for this reaction here. Okay, you wait for this reaction price to come back over here, react to this area of demand zone in order to validate it, and then price tries, it goes up. But instead of price creating a higher high, taking out these previous highs, literally price could not be able to create a new higher high because there wasn't enough demand in order to push the price to the upside. What happened after that is price reacted to the area of demand, and then price came down and then took out the reaction area here, creating a failed demand zone, creating a failed demand zone. So this type of demand zone here, or this type of flip zone here, basically the price can continue going up. This is the risk one. Okay, this one is the safe one. If you find this one, price creating higher highs, higher lows, higher highs, and then a change of character, and then price coming back to a supply zone, this is a normal one that we see in the market most of the time. This is a safe one here. Okay, also this one is a safe one, is a flip of this uptrend here. This one here is also a safe one too, because we have a price creating higher highs, higher lows, and then higher highs, and then higher lows, and then reaction to a demand zone, price pretending to go up, did not create a higher high, and then continue to the downside, creating a failed demand zone here. So this one is also a safe one over here. So this one is also a safe way to trade. This is an A plus setup. Okay, this is an A plus setup, but this one is basically not a good setup. This setup can most of the time fail. What can happen is once the price does this, it can just continue to the upside. Okay, instead of creating a change of character, it can continue to the upside. All right, so price created higher high, higher low, and then higher high, and then price came back to a demand zone, reacted to the area of demand zone to give us a little bit of reaction, did not create a higher high, but then price failed and then broke through the area of reaction here. Okay, once we get that, we wait for the price to go back here, okay, to go back to the area of supply zone. Once the price went back to the area of supply zone, we ended up selling. And this type of setup, make sure you be careful and make sure you take proper risk management on this one, because this one sometimes what can happen is price can continue to the upside instead of reaction, instead of price going down. So over here, instead of price reversing from here, price can just continue going up, creating higher highs, higher lows, taking out the previous structure over here, and then continue as a buy position. Okay, so this type of setup is basically 50-50 setup. So take it easy on this one. And this one is the flip one of this uptrend here. Okay, so we have a price creating higher high, and then lower low, lower high, and then lower low, and then we have an area of a supply zone here. Price comes back to react the area of supply zone, giving us that reaction to validate that this supply area is strong, because why price is reacting to it. Price did not just go through it and create a higher high, rather it basically reacted. Okay, so this is a good way of knowing that this area of supply that broke this structure is basically valid and strong. But what happened after that? What happened after that is, instead of price going to the downside, creating a new low, taking out this previous lows over here, price just reversed and then take out the reaction zone, and then came back to retest the supplies at the demand zone over here. Also, as you've been very cautious with this one, this also is a downtrend of this one here. It is not also safe trading this type of setup. Okay, but whenever you're trading this type of setup, try to be cautious and try to use a proper risk management. All right, so price creates a higher high, but not a change of character. It's just a flip, and then price comes back. After price came back to this area of supply zone, we're just gonna buy it. Remember, this one does not create a change of character. It's just a flip. The first one is a change of character. Here we have a change of character, price going up, and then higher low, and then higher high, and then a straight up change of character. This is the model where we call change of character. The second one, as I summarize, is basically price creating higher highs, higher lows, higher highs, and then price comes back to react the area of demand zone, and then price could not be able to create a new high to take out this previous high, and then price continues to the downside, taking out this area of reaction, creating a failed demand zone. And this is what we called flip plus change of character. Once we get the flip, we also have a change of character because price continues to the downside, taking out this higher low here, and this is what we call a flip plus change of character model. Same as here. For a downtrend, price creating higher highs and then lower lows, lower highs, lower lows, and then price comes back to retest an area of supply zone and then gives us that reaction, but did not create a continuation to the downside. Instead, the price continued going up, taking out this area of basically a reaction area that reacted to the supply zone, and then giving us that change of character. All right. And then once the price gives us that change of character, we wait for the price to come back to this area here, because remember, you have to focus the current price. This is the area that you're going to be focusing at. You're going to be focusing the price creating higher highs, higher lows, higher highs, and then price coming back to retest the area of demand zone. And then you buy, target this area here, and then this area there. Okay. So now the third one that I already explained is called the flip only. This flip only does not create any change of character. What happens is price creates low, higher high, higher low, higher high, and then price comes back to react to an area of demand zone, because remember, we have a break of structure, we have a higher high, now we marked our demand zone. Price comes back to retest the demand zone, gives us that reaction, but price fails to continue to the upside in order to create a new higher high, because there wasn't enough demand in order to drive the price to the upside. And now price failed, continuing to the downside, creating a failed demand zone. And then price goes back to retest this area of, supply, and then goes, right after that, creates a change of character, but going to the downside. But remember, before we take the trade, there wasn't any change of character to verify. Because we cannot verify a change of character, this is a risky setup, okay? Because we took the trade before the change, the main change of character over here. This is the risky setup. So because of that, it's always good to be cautious with this type of setup. And then here, there is the flip side of this uptrend here, okay? We have a price creating higher high, and then lower low, lower high, lower low, and then price comes back to retest this area of the supply zone. After the break of this structure, price came back to retest, give us that little bit of reaction, but price failed to create a new low in order to continue to the downside. And then what happened is, once the price failed to create a new low, price now came back and then took out this area here that basically reacted to the area of supply zone. Now we can see that buyers are stepping into the market and they're trying to take over the sellers. So now we have a price creating a higher highs here in the internal structure here, and then coming back to an area of demand zone. Now we execute the trade targeting the highs here and then the highs here. This is the same as this one over here. Be cautious when you're trading this type of setup. Why? Because price can literally continue, since the price did not create any change of character before that we take this trade over here. Price can literally react to this area and then continue to the downside, creating a break of structure to the downside. Okay, so it's always good to be careful and wait for a confirmation on the lower time frame. Like once the price hits over here, what you're going to be doing is you're going to be waiting for the price to do this on the lower time frame, okay, and then give you this change of character on the lower time frame, like the 15 minutes or lower, and then you wait for the price to come back to an area of supply zone on the lower time frame, and then you can buy this type of setup, okay, to be on the safe side. Well guys, thank you very much. If you're brand new to the channel, welcome. Please go ahead and subscribe. Make sure you smash the like button. And for those who are already following me, guys, thank you very much. I really appreciate it. Please, like this video. And if you have any suggestion or any questions, you can always put it in the comment section. And if you want to upgrade your knowledge, try to get the ebook. The link is going to be in the description. The Smart Money Trading ebook, 109 pages. The link is going to be in the description. This is your brother Jamal.